strong or reputed or proven stock market gurus tell that you should not be taking loans to buy the stocks, or you should not borrow money to invest in stocks. If the cost of capital is much lesser compared to the return on investment, then you can go ahead with that investment even with the leverage portion. So that's other people money, you are taking the leverage of that and creating more money out of that. So basically with small interest rate, you are using other people money to generate more profit. Hello everyone. Today we are going to discuss about the topic leverage in stock market. So this is a much controversial topic wherein very strong or reputed or proven stock market gurus tell that you should not be taking loans to buy the stocks, or you should not have a leverage position. You should not borrow money to invest in stocks. But earlier also I had done a video. I will leave the link for the same above. But if you see there, I had told that if you are really strong in your analysis and you have computed and calculated your possible risk and the cost of capital compared to the return on investments, if the cost of capital is much lesser compared to the return on investment, then you can go ahead with that investment even with the leverage portion. This is my personal view, not a recommendation, but this is what I have followed, and I have been successful in that particular strategy as well. Now if you have seen that video also, then I will give a clear example here with my own case or similar to my own case of buying a stock on a leverage portion. Leverage is nothing but you are opting other people's money, which is the money you borrowed. So because it's not your money, you are just paying the interest and principal on a monthly basis. So that's other people's money, you are taking the leverage of that and creating more money out of that. So basically with small interest rate, you are using other people's money to generate more profit from that capital borrowed. For next, I will take a stock debug fertilizers. This is not a stock recommendation. Upfront I am telling the disclaimer. So Deepak fertilizer I had bought at around 480 rupees, but for calculation purpose let us take 500 rupees. This was in year around March 2024. But then again, for ease of calculation purpose and projection purpose, projecting the figures here, let us take it a year back. So 1 year at 500 rupees, Deepak fertilizer stock was bought by me, and again I had bought for a higher quantity, but for discussion purpose and ease of calculation, let us take it for 2 lakhs. So for 2 lakhs I had bought Deepak fertilizer. So that works out to around 400 shares. So 400 shares of Deepak fertilizers bought at 500 rupees per share 1 year back. Now as I talk today, the current market price of Deepak fertilizer is 1710 rupees. So 2 lakh rupees has become 4,84,000 rupees as I speak. That is within a year. So you have made a profit of 2.84 lakhs. Now if you see, the initial capital was 2 lakh, right? So that has become 4,84,000 rupees. So that 2 lakh I have taken a loan. So I had taken that, say, 2 lakhs at an interest rate of 9% from company. So there are various sources of loans available at various interest rates. So I had got it at 9%. So I had taken 2 lakhs at 9% interest. So that works out to be around 9,884 rupees per year, which is the interest in addition to the principal. So let us round it to 10,000 rupees. So I had taken 2 lakhs with an interest rate of 10,000 rupees, interest amount of 10,000 rupees per year. So that 2 lakh is someone else's money, correct? I had lent it, and this has become 4,84,000 rupees. So 2 lakh is not my money. It has become 4,84,000 rupees, out of which 2,84,000 rupees is a profit. So with just 10,000 rupees interest which I paid in a year, it has become 4,84,000 rupees, of which 2 lakh I am bound to return it back to the lender. And with mere 10,000 rupees, I have made 2.84 lakh rupees, right? So how does this look? This is the power of leverage. So using other people's money to generate enormous wealth. That's all about leverage. But yes, it's a very dangerous tool, because if that stock would have fallen by say 30% or 50% or very much below your buying price, then you have to repay the loan and also you are on a loss. So it's a double-edged sword. So that is something which you should look at. But if your analysis is thorough, you are very strong on your analysis and your conviction is correct, and probably you are the subscriber of my channel wherein lot of insights are given on value investing principle, wherein margin of safety is very high and you select quality stocks with strong research, then I'm sure that there is a very small chance of you going wrong. So in such a strong conviction case with risk completely factored in, then you can definitely go for a leverage and create profit. Now you may be saying that I don't have an interest rate available at 9%, it is like 10%, it is like 11%. Say consider 11% interest rate. Even with 11% interest rate, the total interest amount you have to pay is around 12,100 rupees something. So even with 12,000 or 13,000 in that case, say discussion purpose, let's say 13,000. With 13,000 you are making 2,84,000. It's a good deal, right? So that's all about leverage. And obviously for that 11% interest rate on 2 lakh, you have to pay a monthly EMI of around 18,000. So 18,000 includes your principal and interest rate. So that amount you should have your capability to repay that monthly EMI as well. Now also another thing, the loan which I had taken was not for 1 year, it was for 5 years, wherein I had taken it at 9%. So 5 years EMI, if you see, the monthly EMI load is much lesser, something around 4,000 something you have to pay as monthly EMI. So if that is the smaller amount you have to give, and at the end of the 1 year you got 2.84 lakhs, then you can close that 5-year loan within the first 1 year itself and repay the 2 lakhs and keep the 2.84 lakhs with you as a profit. So that is another strategy wherein you don't have to go with a high intensity EMI. If it is shorter duration, you pay lesser interest but a bigger EMI, right? Bigger amount of EMI, monthly payment schedule will be bigger in amount because the tenure is less. So you can go with a longer tenure. If the profits are booked, then you can repay the loan as well, close the loan as well. This is a different case wherein I don't close the loan because I reinvest that profit into another stock, then have a compounding effect. So that the cost of capital for me is 9%, which is very less, and the compounded returns are much beyond 35%. So it's a no-brainer for me to not to close the loan. So hope this point is clear. But again, a reminder that taking loan is a double-edged sword wherein you should be very careful on your analysis. Otherwise, the things can go thoroughly wrong. See you next video. Till then, happy investing.